Just because you turn 99 doesn't mean you'll get to turn 100. Anglo American doing what it can to make sure that it gets the equivalent of its letter from the Queen. If you turn 100 in England, by the way, the Queen writes you a letter. It's slimming down dramatically. It's losing lots of dead weight, non-core assets. It's getting out of coal and nickel and niobium and phosphates and iron ore. But Anglo still wields considerable influence, and of course it has a big impact on the diamond market and platinum still, for now anyway, due to its size in the industry. This is the MoneyMakers. I'm Bruce Whitfield. Tonight, I'm joined by Dr Adrian Saville, Chief Strategist at Citadel and Cannon Asset Managers, about the volatility of the Anglo American share price, whether the market has really forgotten about fundamentals. We look at it, and this time last year it was, let's call it 200 Rand a share. It went by January, February this year as low as 60. And now it's back at 120.
Yes.
Having gone up to 130.
That's called volatility.
Is that called volatility, or insanity and sanity returning, or just volatility?
I think volatility is the polite word for sanity and sanity. There's, the market misprices, and the market is carried away in the moment. Certainly, earlier this year when we were down in the 50s and 60s, there was extraordinary mispricing to the downside, suggesting that Anglo's was worth essentially very little to nothing.
And the reason for that, and there were some real reasons as to why the market was nervous.
Sure.
Anglo American, big debt problem, global environment not so lacquer, downgraded to junk by the ratings agencies.
So sub-investment grade.
One after the other, down to sub-investment grade. Some might call it junk. There were a lot of reasons as to why nobody wanted to pay 70 bucks a share for Anglo's.
And commodity prices with a big foot on them, and the story about China, economic slowdown. On top of this all, the Chinese numbers are made up, so the numbers are slower and we don't really know what they are, and lots of gloom around commodity markets. So you've got a business that has a attractively diversified portfolio, but none of that portfolio was above water and in the running, or clear in the running. They have a big debt problem, as you flag, but things have changed dramatically. And the dramatic change is captured most easily by the shift in commodity prices. I think even if there were no announcements around restructuring of the portfolio, Anglos would have been on a streak, and you see this by looking at parts of the underlying basket. Kumba is a great case in point.
Exactly. Well, Kumba has doubled this year alone. Year to date, it is sort of double or thereabouts, courtesy of an iron ore price that has woken from a deep, dark slumber.
Yeah. Kumba... Look, maybe one of the things to recognize is that both these businesses are displaying cyclicality. And by that, I don't mean that they are responding to the commodity cycle. By that, what I mean is that they are responding in their capital allocation behavior to the cycle. So as iron ore prices tank, Kumba slims down and then starts to put capex on the back burner. You actually want to be operating counter-cyclically, that it's when the market is most depressed that you wanted to have kept some powder dry, and now you want to be bringing in your engineers and installing shafts when there's surplus capacity and so on. Or
but
stripping.
Nobody ever does that, do they?
So this is the perennial shareholder problem.
Yes.
The task of CEOs everywhere is to allocate capital, whether it's financial capital, human capital, strategic capital. The task of CEOs everywhere is to allocate capital. And unfortunately, what both of these businesses display in recent times is cyclical capital allocation.
Now, here is a scenario. I think it was Tim Cohen's line in the FM fairly recently. Anglo American didn't believe that there was a resources super cycle, and then by the time the resources super cycle was at its peak, Anglo American was waking up to the fact that there was one and started investing. It's a very bad interpretation of Tim Cohen's quote. I don't have it in front of me, but there they were. Tony Treyer didn't believe that there was a resources super cycle. It happened. Then Cynthia Carroll was CEO. And she went and spent far too much money on investing in iron ore projects in Latin America. Kaboom.
Well, it's always easy to be expert after the fact.
Of course. That's why I do what I do. That's what you do what you do, and that's why she got paid big bucks for doing what she did.
And with the benefit of hindsight, she spectacularly overpaid for Los Bronches, Minas Rio in Brazil, Chile, and there was no way that those assets were ever going to generate the required return on capital at now iron ore and copper prices. But that's the benefit of hindsight. But it also reinforces the point about counter-cyclicality, that when you want to be investing in copper or iron ore is when the industry is underwater.
But much harder to sell that story to your shareholders.
Much harder.
If copper's where is copper at the moment? Around what?
Hang on.
$10 a pound or thereabouts?
Yeah.
Okay. At $10 a pound, it's much harder to sell an investment than it is at $50 a pound. At $50
Exactly.
a pound, it's an easy sell.
And
of course,
iron ore
everybody will fund it.
Was being done in the 100 plus.
Yeah.
Now, or recently, when iron ore gets into the 30s and 40s, it's we've got to pull back, we've got to slim down, we've got to get rid of any planned capex and put everything onto ice or into mothballs. And let's not single the mining industry out for attention here, because you see this type of behavior regularly. You see it in my industry, in investment behavior, where at the top of the cycle is when most of the money comes in, and it's at the bottom of the cycle that most of the money leaves. Yes. It's the exact opposite behavior. Think of the banking industry. Banks like to lend when economic growth is fast, when interest rates are low, and when risk appetite is high. That's when asset prices are inflated.
And they get burned every single time.
Yeah.
So, Anglo American. Let's go back to the focus of Anglo American. Market Fani is slimming down. It's basically going on a gym and detox before the European summer.
You know what I really like about, well, as you know, have known for some time, I like the Anglo's portfolio.
Yeah.
But there have been some parts of it that I've been particularly attracted to, and in particular De Beers is the one that stands out for me and has stood out for many, many years.
Now, De Beers, Anglo American in the future, because they are slimming down very dramatically. They will have the Latin America iron ore portfolio. They'll have De Beers. They'll have copper, and they will also and they will have platinum, but a slimmed down platinum portfolio. Sure. All of the rest, the coal, all of the dirty stuff, they're looking to get rid of.
So that all goes. Now, in a couple of years' time, we can meet again and we can discuss whether they got rid of this at a good or a bad price. But from a strategic perspective, what I think is particularly interesting and attractive is that Anglo's has gone from a place where you have been able to invest in hard-to-find assets, platinum and diamond in particular, and now they're putting this front and center, that this is a basket of assets that you simply don't get anywhere else. And if you think about the commodity industry, or the resources industries, more often than not, or most often, you're competing on price. You're a price taker, and you just responding to whatever the circumstances are. By contrast, if you're working in the arenas of platinum, which is an oligopoly industry, just three large producers, or diamond, which is a highly sought after, hard to acquire asset, you start to build into your portfolio this attribute called uniqueness.
No, but does Anglo's through De Beers still have that uniqueness? I'm just rereading Jay Davenport's fabulous book, Digging Deep. It's about a 5-year-old book about the history of the South African mining industry, and reading the bit about Ernest Oppenheimer and his cornering of the global diamond market in the 1920s and 30s, and how he had control. Then it was the cartel. That cartel character of De Beers is long gone.
It is gone. It doesn't change the fact that diamonds are mined profitably, and that scarce diamonds, rare diamonds, are mined extremely profitably. You see this, the impact that this has on some of the junior miners in particular. But despite the disappearance of the cartel, you still have a precious gem that is sought after, highly valued, and now we could start asking questions. Well, is it intrinsically worth? Is that 1 carat intrinsically worth?
It doesn't matter.
Those tens of thousands.
It's whatever somebody's prepared to pay for it.
Yeah.
And that's the advantage. However, one looks at the rally in the platinum price, and recently over $1,000 an ounce. Once again, you've got to. Well, you wonder if Mark Fani's sitting in London second guessing the getting rid of the Rustenburg assets, and Sibanye rubbing its hands in glee based on a turnaround possibility.
And here I think Sibanye is displaying exactly the type of attribute that I spoke about as being desirable. Yeah. That at the bottom of the cycle, Sibanye is looking to consolidate, they're acquiring assets. Sure, they're diversifying away from their historical center of excellence, which is in gold mining, but they have mining industry capability. They're buying assets that I have very little doubt they will be able to convert to strong cash flow with good margin. That's what they excel at. So should they be acquiring that asset? I would say yes. And should Kudafani be getting rid of this? Probably not.
Yeah, and that's the trouble, isn't it? Wayne McCurry, who we know very well on this channel, Wayne McCurry goes, CEOs, by their nature, by the point where they're appointed in a time of crisis, have to fix a problem. And by the time the problem is fixed, you look back and you go, boy, that was a bad mistake. But they have to make a decision on the survivability of a business today and try and position it best for a future that we just can't see 10 years from now.
Yeah, I think that's the point about the power of hindsight. And to imagine that we can somehow see tomorrow is a very, very grand statement. I mean, just talking before the show, we were saying how many finance ministers would South Africa have in 2015, forecast that number. Yeah. January 2015, that number was not unforecastable, was unknowable.
Yeah. But we would have said one.
We would have said one.
Who would have said three? Who would have said three?
And, tell us what the platinum price is going to do. Well, it's going to bump around between $800 an ounce and $2,500 an ounce in the space of a decade. And that takes you from being a spectacularly profitable rock star to scraping together a living.
Now, in a different world, in a different time, you were comfortable paying 200 Rand a share for Anglos. You were comfortable paying 100. You must have been delighted when it got to near 60.
Yes.
Did you top up? Were you buying at 60?
We haven't let go of our resource
you weren't
assets.
Adding at 60?
We weren't adding because we'd been buying on the way down and we're pretty full. And there comes a point where you've simply put enough into a portfolio and you build what's called specific risk. That if this goes wrong, you're in big trouble, and that isn't investing. Then you're in the world of speculation. So on the show, I think earlier in the year, you posed the question to me, would I double down
at 100? Yes.
Yes, and I would, and I still will.
But at 120. Well, even at 100, it's better. Are you a buyer at these levels, considering the volatility and the madness of not only the company itself, but the underlying commodity prices?
In the commodity industry, you're always a price taker, the point that I've made before. So you need to be asking questions about sort of through the cycle profitability of the business, the quality of the resources that they own. And in the case of Anglo American, good through the cycle profitability, fantastic assets. And the one asset that I will repeat is the De Beers business, which if you pull that company out of Anglo's, certainly at the 60 Rand a share, De Beers was worth more than the rest of Anglo's.
So the short answer is yes.
Yes.
There we go. Dr Adrian Saville, Chief Strategist at Citadel and Cannon Asset Managers. There'll be more issues to slice and dice and dissect on the Moneymakers tomorrow. Thank you so much for watching this evening. Good night.